the period is broken down into shorter periods. Then when the first period in the uh, budget, and that is for example, if the budget is prepared for 4 quarters, so in such situation, when the first period expires, included in quarter 1 budget. So when January month expires, so the budget which is separately prepared for January, February, March, out of that January budget will be dropped, and the next month, another month will be April. So the April budget will be prepared and included in the budget. So that's a rolling budget. Rolling budget talks about instead of having it for a longer period of time, the budget is prepared for multiple short periods. Am I audible? Respond.
Yes, ma'am, you are audible.
Because it's showing that WhatsApp is not responding.
Okay, okay.
So these are the various methods of preparing budget. Then we have another type of budgets, fixed budget and flexible budget. See, why is budget prepared? It's to help the future course of action. So when the implementation takes place, the implementation should be according to the plan, according to the planned aspects. See, if let's say the activity is planned at, for example, if they have planned it to be as 50,000 units, that is the budget. Budget has the details for 50,000 units of activity to be taken up. So later on, after the plan, the implementation time, when it comes, implementation time, the actual implemented value will be taken up and compared with the budget. So when the activity level also happens at 50,000, both of them can be compared. But if the actual activity is, let's say that it is at 55,000. So is it possible to compare 50,000 and 55,000? It's not possible to to compare these two different activity levels. So because every aspect of the activity will be different, sales would be different, cost would be different. So comparison is not appropriate. If comparison is not possible, the whole process of preparing budgets itself is a waste thing. So it is not appropriate. So for that reason, flexible budgets are prepared. So what are flexible budgets? See, multiple activity levels, anticipated activity levels for which budgets are prepared and included. We call that to be a flexible budget. Only one period for which or one activity level for which the budget is prepared, we call that as a fixed budget. But multiple activity levels for which budgets are prepared and included, we call that as a flexible budget. See, all possible things like 40, 45, 50, 55, like that, multiple activity levels are anticipated. The budgeted cost for those things are prepared and included, is a flexible budget. But let's say that in spite of that also, the actual activity was nothing compared to any of the activities level. Then after understanding what is the actual activity, then the budget can be revised according to the actual activity. So then also we call that to be as a flexible budget. They change the budget or adjust the budget according to the actual activity level. It's called as a flexible budget. See here, there is an example given. The example says that these are the units at the budget. they have anticipated it to be as 1,000 units, but the actual took place at 1,200 units. At 1,000 units, the direct cost, production overhead, other overheads, these are the costs which are given. But the actual took place at 1,200, so every aspect of the cost at 1,200 would be different. So the cost at 1,200 is 132, 22, 11, so on. These two things are not on par. 1,000 units activity level and 1,200 activity level are not par. So already actually is implemented, that took place. So what is done is the budget is revised to flexible budget, revised budget. So revised budget is also understood as flexible budget. It is revised according to that. So flexible budget, now these 1,000 units at this level, whatever is there, will be now adjusted according to 1,200, and a new budget is prepared, which is called as flexible budget or flexed budget. Now, after the budget is revised, then 1,200 is equal to 1,200. Now comparison will be taken up. So that is also most appropriate because both the plan and the actual are at the same activity levels. So the comparison would be appropriate here. Next, we have accounting for wages, overhead costs. So how are they accounted? The wages. The workers are paid direct wage, that is basic pay, plus they are paid wages at a particular rate. For a stipulated period of time they work. Their work hours are defined. But if at all, if they work more than the defined number of hours, for more number of hours if they work, the additional hours which they put in every day, they would be paid at a premium rate. Usually it is more than the regular rate. It is more than that is almost equal to 1.5 times the regular rate. But there could be alterations also. So basic rate of direct overtime hours, um, overtime premium and bonus is paid if identifiable to specific job or customer. So that's direct labor cost. Indirect labor cost is all payments to indirect workers who are not directly involved in production activity, like cleaning staff, others like people who are working in the factory premises, but are not directly involved in production activity. So um, all payments to indirect workers, we call that as indirect labor cost. Overtime premium and bonus, unless identifiable to a specific job or customers. Anything to do with idle time. Idle time is they are present in the factory premises, but no production is carried on, like a tea break or lunch break. See, that time also, for that time also they are paid wages, but there is no productive activity carried on. So that's unproductive time. So for that, wages are paid. So that is considered as an overhead. Holiday pay, sick pay, etc. When the payment is made, but productive activity is not carried on. See, integrated accounting system, wherein the control accounts are prepared. See, here we see that for material, wages, and expenses, control account. See the first here in this case 1, 2, and 3 are accounted. What is 1? 1 is the direct cost of material, labor, and expenses are purchased by cash or credit. They are debited here. 2 talks about the direct cost consumed are charged to work in progress. So everything is accumulated in work in progress. So whatever is accounted here, it is transferred, taken to the work in progress or work in process account. It is taken to the work in process control account. What is 3? This is about the indirect costs are charged. So here there is a split about the material, wages, and expenses are identified to be as direct amount and indirect. Direct is going to work in process a control account. Indirect, that is three is going to the production overhead control. So the indirect costs are taken to the production overhead control account. So we see 1, 2, and 3. What happens in work in progress control account? So it receives the amount from um, the material, wages, expense control account. The direct portion of it is received. Then we see 4 is there. 4 and 5. So 4 talks about in work in process control account. Overhead is absorbed into units of finished goods produced. These are at the rate of some overhead rate. These are not actual amounts incurred. Here we see these are the actual amounts which are incurred, spent by cash or credit. This is absorbed based on some rate which is calculated. Whatever is the absorbed amount of overhead is accounted here. So we have the direct expenses, all direct costs, direct material, labor expenses, plus the overheads absorbed. So together, these two things together, it becomes what is the cost of finished goods produced. So from 5, it will go to the finished goods account. Okay, it goes to the finished goods account. Now, in finished goods account, it is received, and from finished goods, 6 is there. Cost of finished goods sold is charged to the cost of sales. So 6 is cost of finished goods. So this amount of cost of finished goods produced is charged to finished goods control account. From there, it is going to cost of sales account. So from here, it is going to cost of sales. Cost of sales is charged to the statement of profit or loss. So from cost of sales goes to statement of profit or loss. Now, there is a difference between what is the overhead absorbed and what is the total overhead which is incurred. Now, from overhead account, overhead is absorbed into units of finished goods produced. So, this is taken here to that, and the difference between these two will be the reconciled amount. There would be a difference if the same amount is not incurred or the same amount is not calculated. There would be a difference. If there is a difference, then that would be reconciled. So these are the steps in which the control accounts are prepared, and every transaction of the cost statements are posted into the integrated accounting systems. The next topic is about performance measurement. Until now, all that whatever it has taken place is accounted in the books of accounts. So, starting from we have seen about what are costs, how are the costs incurred, what is material cost, labor cost, overhead cost, in terms of planning, standard costing, budgets, then forecasting techniques we have learned. So after that, the next topic what we have is the performance measurement. How to measure the performance? See, for that thing, performance measurement, under that we have one topic called as responsibility accounting. What is responsibility accounting? Responsibility accounting accounts for the planned and actual events. What is planned? Planned and whatever actually happened is accounted. See, under this, we have a concept called as responsibility centers. So, the accounting which is taken up for the responsibility centers. What are responsibility centers? See, in an organization which is large in size or multiple activities are carried on, it is complex, the structure is complex. In such a case, they are decentralized or they are divided into various divisions or departments. Each department, there is a manager appointed. Manager is assigned some authority. Based on the authority, he takes decisions which are implemented. And after the decisions or the plans are implemented, he and the department would also be held responsible for their decisions. So that is a responsibility center. So subunit of an organization where there is a manager appointed with authority to take decisions and eventually also held responsible for the decisions taken. So that we call that as a responsibility center. There are 4 different types of responsibility centers. These are basically subunits of an organization. So there are 4 responsibility centers, 4 types of responsibility centers. The first one is cost center, then revenue center, then profit center and investment center. What is a cost center? There are certain departments where they only incur cost. There is no source of revenue for them. So when they incur only cost, we call them as cost center. Like for example, we see production department, HR department, they incur cost. They do not earn any source of revenue. There's no revenue which is generated. They only incur cost. So we call such centers to be as cost centers. So what should they do? Their focus would be on controlling their cost to ensure as much as possible to cut down on their cost. So they will be evaluated about whether they have taken measures to control their costs. So that is the evaluation. Second one, revenue center. So there are certain centers which only generate revenue. Technically, we see that such a thing is not a possibility to only generate revenue, but some examples are also quoted about what is a revenue center. Let's say that if there is space available, it is let out to someone, and then revenue is generated. Let's say that in a petrol bunk, we see certain outlets are set up. They pay rent to the petrol bunk, or some space is available, it is let out to ATM centers. So bank pays the rent for the ATM center. So they utilize that space and some revenue is generated. So such things are called as revenue centers. They do not incur cost there. Okay. So that is a revenue center. So their responsibility, the manager's responsibility is in terms of maximizing the revenue, making more amount of revenue. Then the third category is a profit center. A profit center is a center where they generate revenue and also they incur costs. So revenue minus cost is profit. So the efforts of the manager would be to cut down on the cost, control the cost, to take efforts or to take measures to maximize the revenue so that the profit can be maximized. The fourth one is it's actually a profit center only, but the investment which is made with that profit center is identifiable. Generally, we see investment is made as a whole uh, for various departments, but specifically with one department, what is the amount of investment? If it can be identified, so the performance would be on a relative base. That is, they generate revenue, they incur costs, they make profit. So all 3 aspects would be taken into consideration. efforts to maximize revenue, minimize cost, so the profit can be maximized. And this profit is compared with the investment and relatively it is measured. So manager is responsible for profit and return on investment. Then we see different areas within an organization require different performance measures. Different types of organization requires different performance measures, which are often affected by the objectives of an organization. So each type of department, they have a different objective. So that is whether to cut down on the cost, control the cost, etc. How is the performance measurement taken up in an organization? So this is very important. This is about the ratio analysis, which is studied. See the next topic. See under performance measure. Under performance measurement, we've learned about the topic called as responsibility center. Then, if the performance has to be measured in an organization, so how is the performance measured? The performance measurement is both in terms of financial aspect and non-financial aspect. See, we understand performance is measured by way of profitability. That is the financial aspect, whether sales is increased, cost is decreased, profit is increased. So we generally understand that. So if it is in the financial sense, if the financial measures are taken up to measure the performance, so there are various tools available. Among them, the best tool is about ratio analysis. With the help of ratio analysis, performance is measured. Various types of ratios about profitability, liquidity, capital structure, etc. So those measures are taken up, and then the performance is calculated. Financial aspect. But apart from financial aspect, there are certain other non-financial aspects also which have to be measured. So measurement would go in terms of productivity, quality, customer satisfaction, flexibility, customization, employees skill enhancement. So these are the ways in which the non-financial performance also can be measured. If it is performance measurement of financial aspect, that is what everybody understands. So it is easy. It is simple. The the historical financial statements are available. So select variables from that and then measure the performance. It is easy to prepare and calculate. Everybody understands that. The focus is on short term. They can be manipulated. Manipulated, for example, if it is a profit margin calculated. Profit has different meanings. So it could be a gross profit, operating profit, earnings before interest and tax, profit before tax, profit after tax. So various profits are there. So what is assumed to be as profit can differ in different situations. So we see that there is a possibility of manipulation because it basically goes with the assumptions of the management accountant who's preparing these analysis. So that can be manipulated and they don't give the full picture because only one part of the financial statements at a time is taken up and it is evaluated, it is measured, the performance is measured. So it may not give the complete picture of the organization. It is only focusing on the financial aspect, ignoring the non-financial aspect. Therefore it does not give a full picture of the organization. On the other hand, there are non-financial measures also. So non-financial measures, the advantages are, hello, did anyone say anything? Non-financial measures, we see productivity, quality, satisfaction. Advantages are it's forward-looking, can highlight future problem areas. So very specifically focus into various aspects of it, whether customers are satisfied or not, whether they are adhering to the quality standards which are prescribed for them, etc. Are they reaching that productivity levels? It goes on that way. Then it provides a wider view. So only financial is a narrow view, but other aspects also included. It is a broader view. Allows manager to focus on problem areas. So they identify what is the problem area. Maybe customers are not satisfied. So profitability may be looking very attractive, good, but on the other hand, we also see that there is some kind of dissatisfaction among the customers. So when that is measured, they can work out on why are the customers not satisfied. So they can take it up and then work out on that particular area. What are the problems with non-financial measures? It is time consuming and costly because there are other aspects also which have to be understood, analyzed, and measured. That it is complex. Financial, it is easy to understand. It is all quantitative. This is qualitative. It is not all the time in quantitative figures. Sometimes qualitative data also has to be considered. So it is complex, no standard set of measures. Some areas, example satisfaction, are difficult to measure. So these are the problems of non-financial measures. In connection to performance measurement, there is a model given which is called as balance scorecard. Um, because performance measurement of the entire organization has to be taken up, there are various aspects of it. So the model suggests that the entire organization has to be looked into from 4 different perspectives. So financial perspective, the first one is financial perspective. Then the other perspectives are customer is one area, customer perspective, internal business process perspective, and learning and growth. So financial, we understand financial about they understand about what are the financial aspects which have to be taken into consideration. How can they improve the financial performance? That can be known. Then customer related issues, whether the customers are satisfied or not. Customer relation related issues are considered under customer perspective. Then the way in which the internal activities are carried on is internal business process. The employee related issues are taken under learning and growth. So how is the performance measured? So in this case, the first important point is for each perspective, there are certain um, critical success factors identified. So for example, if it is financial, so how do we measure the financial performance? Sales will be one factor. Sales should do well. Profit should be very good. Liquidity should be good. Profitability should be good. Capital structure should be appropriate. So we identify the critical success factors. Then each factor is measured. If it is customer, whether the customers are satisfied, how many of them are loyal to their products, how many of them are new customers. So various critical success factors are identified. How to measure customer satisfaction? If it has to be measured, then feedback has to be collected from them. So measurement is also important to ensure, to look into that, whether um, in that particular area, that perspective, uh, the performance is good. If it is internal business process, like qualities um, taken up, quality standards are maintained, the operation, the zone where the production is carried on, it is accident free zone, or if there is an accident which takes place, uh, is there a policy to pay accident claims, insurance claims? So various aspects of the organization are measured in terms of internal business process, quality, flexibility, customization, delivery on time, accident free zone, no defective unit. These are examples. Then individually each of them have to be measured. In case of learning and growth, whether the employees are given importance, that is their skill enhancement is taken into consideration. Okay, their skill enhancement is um, like are the trainings provided for skill enhancement? So if there is training provided, how do we measure how many of them attended after the training? Post training sessions, is there any improvement in their performance? Is there any innovation, etc.? Like this, the CSFs are identified, and each of these CSFs are also measured. Okay. Now here, what are the methods of costing? The methods of costing are uh, when a specific job is separated, because if the it is not a continuous process, it is not that same jobs are taken up for all the customers. If it is a separate customized job taken up, so everything connected to the job should be accounted separately under a job cost sheet. So the accounting costing method which is followed in such type of businesses, where individually each job is separately taken up and the costs are accounted for that. So job order costing is what is followed. But if the work is taken up in lots of units, that is batches of units, so the batch costing system is what is followed. So everything related to that batch of units which are produced, costs are accumulated. We call that as batch costing. Then see marginal costing and then absorption costing, how the reports are prepared. If it is marginal costing, they have this contribution method, product contribution, sales minus variable cost is contribution, minus fixed cost is profit. But if it is absorption costing, they record it as sales minus cost of goods sold is gross profit. Gross profit minus operating expenses is operating profit. So that's how the presentation takes place. Preparing reports in different organizations. In case of service organizations, first we need to understand what are the characteristics of service industries, service businesses. We know production or manufacturing organizations are involved in purchasing raw material, converting them into finished goods, and the finished goods are sold. So that's their main operation. But what about a organization which is involved in rendering services to the clients or the customers? So what is the nature of such an organization? What is the nature of work carried out in such an organization? So preparing reports in different organizations about service industries. There are features of service organizations. Features of service organization. First one is the service which is provided is intangible. A product has a tangible, that is a physical form. It is tangible in nature. Products can be seen, touched, felt, but a service cannot be felt. So suppose the passengers are carried from one location to another destination. So in that case, they are carried to that place. So it's a service provided, but there is no physical form of that service provided. Okay. Hotel gives an accommodation to the customers. to stay for a day or two. So a service provided to use the accommodation. There is no tangibility related to that, but products can be carried. There is a tangible form of that. Okay, then it is customized. Variability, it is customized for each customer. It is a different kind of a service. Not, it is not uniform. It is not homogeneous. Products, on the other hand, are all similar to each other. So they are homogeneous in nature. But service industries, they provide customized services to each customer. Not all of them start at the same pickup point and reach the same destination. There may be different stages at which they get down, or the customers who use these other services also, not all of them use the same type of service. So there is customization or a variability is seen in that. See, inseparability is at the time of production, only the consumption also takes place. So both of them happen at the same time. Production and consumption happen at the same time. It cannot be carried forward to the next period. That is perishability. Let's say that if the accommodation is not utilized on a day, this can be carried forward to the next day as a closing stock. No, it cannot be. It perishes. If you use it today, it is used. If it is not used, it perishes. But let's say the physical product, the manufactured units, if they are not sold in a period, they can be carried forward to the next period, and then they can be sold in the next period. So the production and the consumption are in two different periods in case of manufacturing products. But in case of service business, both of them are at the same time. Perishability is there in case of service industries. There is no perishability, in at least in the short run. If there is no perishability, they can be carried forward to the next period. What is reporting in a service organization? Difficult to establish a cost unit. Then examples are chargeable hour. How do we calculate? See what is the cost per passenger to travel 1 mile of distance, or what is the cost per um, customer to use the accommodation for 1 hour, half a day, 1 hour, or whatever is the time parameter. So for each industry, for each type of business, there is a different um, measurable unit or chargeable unit. Then composite cost units are often used, like room night in a hotel, ton kilometer for a courier company, etc. Then this would be the last under this section. In case of organizations which are established with a motive to earn profit, we call them as profit organizations. So profit parameter will be taken into consideration and the measurement will be according to that. But there are certain organizations which are established with a not for profit or objective. They are established to render some services but not to make any profit. We call them as not for profit organizations. Like examples are government bodies, charities, state run hospitals, and schools, professional institutions. So, in this case, their objective is not to earn profit. So, does that mean that they don't have to take in any measure to, perform well? Because there's no accountability, no profit is taken into consideration. So, how do we measure the performance in such organizations? Is measured by way of 3 E's. What are the features of not-for-profit organization? Difficulty in identifying objectives. What are the objectives? Objectives are to cater to the requirements of the society, providing some service, rendering some service to the society at large or a specific group of people in the society. So that is their main objective. So difficulty in identifying objectives. What do they want to serve? Clear definition should be there. There may be multiple objectives. When there are multiple objectives, then they have to prioritize which one is the most important objective which has to be fulfilled. Then next in the order, they have to be prioritized. how do they measure whether they have, because there is no profit concept, then how do they measure the performance of a not-for-profit organization? There is difficulty in measuring the performance. Then those using or benefiting from the service may not be the people paying for it. Okay, see, donations are contributed from someone and they are spent on some other stakeholders, some other people. So the using or benefiting from the service may not be the people paying for it. Then the concept of how do we measure the performance, that is what has to be looked into. Because profit is not the criteria, it doesn't mean that they don't have to take efforts to cut down on the cost. First part of it is, when cost is spent, it is spent with an intention to achieve some objective. Let's say if amount is spent, it should serve the purpose of providing something to a particular group of people or some particular section of the society. So in at the time of spending the cost, they cannot waste the amount. So cost has to be saved, economized. Cost effective measures have to be taken up. So the first he talks about economy. Economy is measuring the input, how much input or how much cost is spent, whether there is any effort to save the cost. Second, he talks about efficiency. Then this input is measured or linked with output. Okay, input is measured with the output. How much of benefit is derived out of spending this input? That is about efficiency. Effectiveness is by taking appropriate measures to cut down on the cost and getting the benefit in a way that the objectives of the organization are achieved. Then we call that as effectiveness. So there are three E's which are used to measure the performance of a non-for-profit organization. I've taken a lot of time. It's already five, uh, 5:45. That's the time. Doesn't matter because tomorrow is the last class. We see that we have other topics about decision making. Seems to be tight schedule tomorrow also. And then we will learn about capital budgeting also. On an optimistic note, if there is any time left, I don't see any time would be available. But let's say if there is time left, I will take it up one or two questions. I don't think anything more than that is possible. But tomorrow would be the last class. Okay. Any doubts? I hope it is clear what we've learned today.
Yes, ma'am, it is clear. Ma'am, tomorrow can we stick on to more problems? Like,
In fact, actually, these are these slides also have the numerical questions only. Without doing numericals, it is not possible to explain these things. So whatever
okay,
examples are there, that only I will solve because I.
okay, ma'am, it's like to make more like theory, we can only like somewhat study like
But then I
the
have to
prop.
do the entire syllabus, no? So I was going on topic by topic.
Okay,
These
okay,
questions, whatever are the numerical examples given, I think I will focus only on those things. But beyond that, it's like if there is a numerical question, we will work it out like that.
okay, ma'am.
Beyond that, I don't see there is a possibility of taking up any other thing. That is what was my intention.
Okay, ma'am. Thank you.
Okay, okay then. See you tomorrow. Okay, good day.